All right, everybody, we've got a lot to go through today. Let me first give you an overview. We're going to start with OX, up more than 100% in a couple days. I've been talking about this for a while. We're going to talk about what do we do? Why is this happening? I have the lowdown for you. We'll also talk a little bit about Kyber. I'm going to talk about what's going on here with the Fed printing money and why that is fueling this market. I'm going to talk a little bit about my number one love, Ethereum. How they're working. They're going to be integrated with China, JP Morgan, among others. I'm going to talk about the big threat to the crypto market right now. The attack vector that is coming, I think, is the government attacking stablecoins, dollar peg tokens. We're going to talk about that a little. I'm going to talk about overall portfolio, not just crypto, but also in general. I think people liked it when I sort of started talking about portfolio overall suggestions. I'm going to talk about the geniuses that I follow and regarding what's going on with the market overall. Chamath, Buffett, Zell, Dalio, Cathie Wood have all spoken about what's happening. I'm going to tell you what they're saying, what that makes me think. We're going to talk about Tesla. Tornado Cash, a new thing on Ethereum I want to talk about briefly. I think that's the lineup. So please, listen for as long as you can. If you stop, make a note to yourself and come back. Remember, listening to the idiots on Facebook is not, listen, and I'm not putting myself in the class of Warren Buffett and Ray Dalio, who you should listen to 10 times before you listen to me. But I tell you, I go to Facebook and it's moron city. Spend your time listening to people who have a fucking clue. Okay. Now, OX is it's a trading exchange. You can stake your tokens and earn a dividend. So there's a lot of tokens that I believe will have value. And if I skip ahead a little bit to, I'm watching this 0x, you can earn a dividend. KNC, soon you'll be able to earn a dividend. REN, you'll be able to earn a dividend. Augur, I think maybe you can make I'm not sure if it's sort of like if you're resolving bets, you could earn. And I think a lot of these tokens, their value, I think a lot of it should be based on its income stream in the long run, or the growth of that income stream. So it's important to watch that. So I've been watching 0x. And I got a little bit of tokens from me, not a big amount. And I'll get to what I'm going to do. But when you look at, I'm going to share with you some of my numbers here, okay? These aren't huge numbers for me. For some of you, these may be too big, and I'm going to reduce it after what I've seen happening. I don't love 0x anymore, okay? Not that I ever loved it, but as far as testing, to me, I'm like, you know what? This thing looks a little stupid. I shouldn't say stupid either. It's a game. I think it's a little gamey. Okay, let me go through the numbers and I'll explain to you why I've become more pessimistic. So now tracking this shit is not easy. So I'll show you what I did here, right? So I stake. So let me show you on this. First of all, if you go to 0x, and you connect it with your wallet, and you can see there's different places where you can stake your tokens. Okay. So I look at which ones are making the most in dividends, right? They're making the most fees, which they then share with you from when you stake. And, there's not a lot to choose from. Most of them are making nothing. These are the top two. And if you click through and look at how it's going, honestly, I'm not seeing a growth rate here on dividends paying out. In fact, this is what it looks like for most of them. They had a burst, and then it's sort of gone down. Now, it's early in the game, and I like watching this, but this is not making me excited. This doesn't make me think, oh, this is why the price doubles. I see dividends are slow, are sort of small, and going down for most of them, and there's really only two to choose from, these two. And these are the numbers. So I'm not that excited. And then, so we're not seeing great growth. Granted, this is not a huge amount of time, and I would keep watching. This can change, right? Who knows? But that doesn't tell me any reason why the token value should go up over 100% in 3 days. Now, so let me just show you what I did. It would show how much you have in rewards, right? Total rewards. And I'd have the previous 10 days, the previous epoch, how many rewards. And I'd subtract from that to see how much I gained in the last period. And I'd have how many tokens did I have staked for that. Then I take the, what's the price of Ethereum and 0x at that time. I convert those to US dollars and compare the dollars of ETH, so the dividends paid in ETH, how much is that in dollars, compared to the amount of 0x I had staked, and convert that to dollars. And use that to determine, well, how much did I earn in dollars over the period? Extend that over a year, and I come up with a dividend rate for the year. Okay? So the dividend, when I was looking at it, when the thing was at 20 cents, right? This has been 0x's price, 15, 20 cents, earning a 1% dividend. Okay, well, this is fun. It's nice. It's interesting. So now the price goes up over 100%. So that makes this dividend rate. So this dividend rate is not that exciting. To me, the fact that they're paying a dividend means it's real, means something's happening. We get some statistics we can watch. But I'm not excited about 1% a year in dividend, right? Now, if the growth rate is crazy, I would be excited, but I don't see a growth rate yet. I don't see any reason to be excited, okay? And when the price goes up 100%, the only thing I'm excited about is selling it. So did I sell it? Well, then I start looking. Look, guess what else? So the way their little staking works, when you stake, if I want to get out of this thing, right? So if I want to get out of 0x, well, I don't have to show you. The bottom line is I can't sell my 0x because I'm locked in. For, now it's 7 more days. That means everybody who's staking is stuck in for 7 days. My guess is this is a little bit of a pump and dump scheme, and before the 7 days is up, the price is back down, right? And I don't get to sell it. And to me, that's, if it's up, well, I'm gonna, listen, I think if you saw what I just did there, right? This is gathering data to determine if the stock is valuable. You can do this with $20, right? I don't know, maybe 20 is too little. At some point, like, fees interfere or something, possibly, but like it's like a couple $1,000s. That's too much for this experiment, I think. And especially if the price is up this much, I want to get out of it, but I do want to leave a teeny bit and keep watching. Maybe the numbers get better. But right now, I see no reason to be excited. And I don't like what they're staking. So now when I see staking, so this one is Pricto is better than Dust. But if I want to get out of Dust, I have to miss one whole staking period and possibly wait 10 days. And I'm not in love with the whole system. It's just, what's this thing about where I say it's a game? It's like you end up, I don't like it. I like an investment where you're staking, which provides liquidity. I like when you lock up and you put your money somewhere because it creates value for the world in some way. I don't like it when you're locking up money because you're trying to like outsmart the other guy or time it, or pump and dumpers are trying to, so now there's a strategy. So now I start thinking, right, with what's going on in OX, what goes through my mind is, okay, I only earn 1%. So maybe what I should be doing is holding 0x and not staking it so I can sell it during pump and dumps. And as soon as my mind starts going in that direction, I'm not thinking about investment. I'm thinking about playing a game. And I don't want to play games. So I've sort of gone a little negative. Like I said, I think I want to keep tracking this, but with less. I don't need this much money in this thing to track it, right? Not that it's a ton, but I think I could do this experiment for $400 and not instead of a couple thousand. Now, which brings me to Kyber, who is a competitor, and it hasn't launched yet a similar structure, or hopefully it's a better structure. So Kyber, also, you will stake your tokens to help provide liquidity on their exchanges, and you'll be able to earn dividends on it. And according to their numbers, depending on what you think the average, volume is, the volume you can see here is rather volatile. But I think the payouts on Kyber will be a lot higher than we're seeing on 0x. But I don't know. I wouldn't go big in these things. I like Kyber. I have a little bit more in Kyber than maybe I should. But because I love the growth rate. If you look at, that's 1 year. If you look at all time, I mean, it's growing 1,000% a year. And then the dividend, they're supposed to pay or burn tokens of 0.25% of every transaction. If you run the numbers on it, it looks like it's like very profitable and will be, and a lot of that money is going to go to the token holders. So I'm very optimistic, but again, it's got to launch this thing. Then we stake our tokens. You see how much it earns. You see the growth rate of those earnings. And if it looks good, then you go big. I like to go big after we have the facts. So, so I'm waiting for Kyber. I've been disappointed. And I tried, there's another one, what the heck's it called? SNX, Synthetics. Is that one here in the top, something or other? Synthetics is another one where you stake and you earn, and it just, I played with that one and it felt like a game. It didn't seem like a serious thing, and it's sort of been doing okay. And I don't, the point is sometimes you see these investments or these token schemes, and the story sounds great, but when you start actually on your own staking and investing, you start to feel like this is just a game. And if you feel that way, I don't think it's, that's not where I like to invest. Now, if you're a gamer, games do make a lot of money. I think investing is a much bigger market than gaming. But gaming is big enough. But an important point, and I think for a lot of you, of my followers here, people who are listening to this, a lot of you looking for stuff to do, how do you make money? This is where you can have an advantage over the big money investors. And you know what it is? That you have the time and possibly the patience to sit in there and eventually have some tokens staked in 0x and track it like I was doing. Stake in Kyber. Try the different staking things. Go into this Synthetics network. Again, not as an investment. Not with a lot of money. Just enough so you can start gathering data. And there's going to be a lot more options. And like I said, Augur is going to be upgrading its platform. Don't start speculating on the token going up or down. Become somebody who resolves bets. Start testing the system. And when you're in the system, if you're like, this thing's a pain in the ass, I don't get it, it's not good, or it's a game, whatever. But if you start seeing really good numbers and you're tracking, then you know it's a good investment and you're learning. I think this is a place where you can sort of make money by gaining knowledge and being ahead. A lot of these big investors, they don't even take the time to do this stuff. So that's my thought on 0x. I would dump it here, but I'm all locked up in the staking. I can't sell it for 7 days. And if it's still up in 7 days at this much, I definitely would reduce my position. Okay, now, why is the market going up? Well, guess what? Look at the Federal Reserve. This is what they do. They create money out of nowhere and use it to buy junk from their friends who they're bailing out, right? And this is what they just pumped into the market. So this shit sloshes around, and why is Bitcoin? Why is crypto? Listen, if you give a bunch of hedge funds a shitload of money, they're going to spread it around, and then different people have different investments, and it goes everywhere. Why is the stock market up when the economy is so shitty? Well, the Fed just gave everybody a ton of money, right? All the bonds, they said, well, the bond's not going to go bankrupt, so, okay. So we feel safer in stocks, and where else are you going to put your money? Federal Reserve is no longer lender of last resort. I mean, I want to talk about this. I've listened to these geniuses here, and I think it's so important. I have a friend of mine, sent me an article. I get all people email me, friends and family. Oh, look at this article. Look at that article. What do you think of this? First thing I always do is I look up the author. First of all, if they're just a journalist, I don't care. I don't read it. But what does a journalist know, right? That just means they're a good writer. Now, I'm not saying there aren't some great journalists who are experts in a particular area and they write about it. I'd research it and then maybe I'd figure that out. But most of them, they're just writers. I had one, somebody sent me an article, I looked it up, it's someone from Boston, and the writer, very interesting and fun article he wrote about coronavirus. The guy writes about the Patriots. Almost every week he writes about the Patriots, New England football team. And he decided to write about coronavirus. I don't care how good interesting his article was. I don't listen to idiots. And I'm saying he's an idiot in general, but what does he know? If he wants to tell me how the Patriots are going to do next year without Brady, I'll listen. But if he wants to tell me what's going on with coronavirus, I don't want to listen. And the same goes for, you can no longer take, it's in the New York Times, it must be great. No. Who wrote the article? If Warren Buffett writes an article and it gets printed in the New York Times, you read it. If some hack... Okay. Anyways, listen to experts. So I was talking to a friend and he sent an article. And I said to my friends, I'm not going to read it and now comment to you. And who cares? I said, I've got a list. I got 4 hours of Warren Buffett to listen to. Sam Zell spoke for 45 minutes. Ray Dalio's got a couple hours. I got Chamath. I got these people to listen to. Cathie Wood is putting out a video every week. I don't have time to read what some schmuck who probably makes less than me, and it doesn't matter. It's not about how much you make. But and I looked up the author. It's like some guy who has some government job, talking his book. Some schlummy. I don't care. I've got smart people to listen to. So anyways, where was I? So the way the system is supposed to work, the current financial system is broken on so many levels. I don't know how deep I need to go into that, but the point I wanted to make is one of the main points of the financial system is the Federal Reserve is supposed to be a backstop. A lender of last resort. When everything is crashing, they come in and look at what's really valuable, and there's nobody left to buy and to support these things that are actually great. And they come in then as the lender of last resort to invest in these great assets. That's good for everybody. And one thing I learned, there's a great book, if you've got the patience to read, The History of J.P. Morgan. What the heck was it called? Let me see if I can find Amazon J.P. Morgan book. It was House of Morgan. This book. Long book. But, reading history books like this really can help you understand how the world works. And, one thing I got from this book that I thought was interesting, we always complain about, the government bails people out. And the bottom line is this. When markets crash, it keeps going down and down. At some point, no matter what, at some point, the price gets low enough and somebody has enough money and they come in and they start buying and it puts in a bottom. And so, year long, 100 years ago, J.P. Morgan, bailed out the country. And it wasn't a bailout. They invested. He was like, okay, prices make sense. And he put in the bottom. And the government was like, oh boy, that was bad because, we shouldn't allow individuals to do that. So now the government was supposed to be the lender of last resort. And the point is, someone will always step in at some point, and the question is who? I don't believe that it always needs to be the government, but someone will step in, and it's not necessarily horrible if it's the government, but it's not the government right now. Warren Buffett didn't even have a chance to look at prices, and they didn't even get that low before the government started buying everything off the shelf. And that's what all these guys are saying is like, that, you know, the Federal Reserve is not lender of last resort. They're just propping up the market. There's no price discovery. The prices in the market are all wrong. They're not real, right? The stock prices, we know they've been manipulating interest rates for decades, which pushes up prices higher. Now they're just literally buying shit to keep prices up. Need to be very careful. And then, you know, this spills over into crypto, and that's why everything's going straight up right now. But there is a risk. There is a risk to crypto that can send stuff down in a hurry. And it's this the central banks attacking dollar peg tokens. And I believe that is coming. Should we get to that? Because I do want to talk about some more tokens, the excitement of Ethereum. Let's talk about the attack vector, because we're excited right now. Things are going up. OX went up 100% in a couple days. Ethereum are over 200. Or Bitcoin, look at it go. Everybody's excited. Good, but stay calm. Take your breaths. I still have my portfolio. I'm still, you know, it's like at least 10%. I mean, I got, you know, cash, the dollar is still king right now, okay? So be careful, but let's talk about this attack vector. So right now, dollar peg tokens are the #1 use case in crypto right now. People are using it. Probably mostly like traders for international and instant settlement of dollars. And look, these are the dollar peg tokens here. You know what the green one is? Tether. You know what Tether's backed by? Hope and a prayer. I mean, it's backed by some dollars, but Tether, so Coinbase, that's the blue one here, you know, it's backed by dollars, it's regulated, and, you know, you can sort of, I think you can trust that it's backed by dollars. But if the federal government one day says, we don't want this stuff around anymore, they'll shut down USDC in a minute. They might fight, you know, and USD and Coinbase has connections, but look at the size of Coinbase here, very small. Now, DAI, dollar peg token, what's that? The orange one. Like, you can't even see it, you know. And I love DAI. DAI is backed by Ethereum, and it's pretty decentralized. If the government went after it, they'd have a much tougher time shutting it down, but they're not going to go after it right now because it's this sliver. What do they fucking care? DAI is hard to attack for the government, and it's tiny. Tether, well, the government's, you know, I don't know exactly what's going on right now with Tether's dollar reserves, but the government already stole some of it and was holding it. You know, and there was a report recently, central banks talking, saying, you know, we should consider banning stablecoins. If crypto markets keep running, and the Federal Reserve is trying to print to bail out their friends, they're no friends with crypto, right? They don't want all this stuff going up, and they know they can send it down in a hurry by shutting down all the dollar gateways to Tether. And that would induce quite a panic, and I wouldn't be surprised if everything fell. Now, on the other hand, so first of all, I think this is an attack vector you need to be ready for at some point. And they don't give you warning, oh, soon we're going to attack. Like, they'll just be like, Monday morning, all banks that deal with Tether were raided, and there's no more conversion of Tether to dollars, and people start panicking, and Tether starts losing its peg. I mean, that can happen in a hurry. Now, what happens if that happens? People want to start getting out of Tether. What do? Do they all run to DAI, which is safer? And could DAI absorb this sort of growth in a minute? I mean, things move fast on crypto. This could move to DAI in a hurry, but could it move to DAI? Is there that? You know, there's not enough DAI right now. Would enough be created? I don't know what would happen. Or would people just run to Bitcoin and Ethereum? And then the price of Bitcoin and Ethereum come up. And the government trying to attack crypto is like a whack-a-mole. They whack Tether and something else just goes straight up. I don't know. But it's interesting. this whole topic. What happened to my screen here? I want to get out of this a little bit. Oh, now, did I want to say anything else about this crypto? And on Ethereum, you know, Ethereum is the platform for everything and everybody, including, of course, these dollar peg tokens. 80% of the volume of dollar peg tokens is on Ethereum and growing. Or maybe it's 75, or here it says 75% and growing. And then this on Ether, what is being traded, you know, so here's stable coins in the red is a big part of what goes on Ethereum. Green is other tokens. Blue is just Ether itself. And you can see, you know, things, there's a lot going on in Ethereum. What other charts do we have here? I like this article. Number of transactions. This is Ether stablecoin here. If you look in the yellow, you know, stablecoin is becoming, and it's mostly Tether, is becoming the number one use case, the number one, what do you call it? Transactions. What is this called? Ether gas. Shoot. There's some website gas info. What is this? ETH gas station. Always the number one is Tether, right? By the way, you know, Kyber's been growing. I like to watch this because fees, it's not, there's many reasons why this metric doesn't always work. But, you know, it shows usage. If people are paying fees, this has been going up. Chainlink has gone down a ton. Over 30 days, Chainlink used to be like 80,000. Chainlink is another one that I'm not, it's like everybody loves it. And I'm like, I think it's an okay business. I just don't love the token. And, you know, seeing its gas usage going down. Now, it could be that they were just so inefficient with gas usage and they actually fixed that. And so the transaction usage isn't going down. It's just the amount they pay in fees went down. I don't know. But anyways, all right. So, and back to the Fed. So what I think, I was expecting, I'm just listening, and now I'm going to pull guesses out of my ass, okay? You know, the Fed had $1 trillion-ish in funds. In 2008, they doubled it to 2. Then over the next several years, they doubled that to 4. So I was like, okay, now they're going to go to 8. Well, we're not at 8 yet. And then it'll probably double again over a number of years if the pattern continues. Why would the pattern continue? I have no idea. I'm just, if it does continue, you know, that's what we would expect. So, and also to say that the Fed's balance sheet would go to 8 trillion is not, you know, it's just another double. Why not? Right? And we're almost there. Now, the other thing, you got to remember though, that the Fed, like this is not, they don't like to admit that this is how the system works. It's supposed to be that everything's fine and they're only lender of last resort in extreme catastrophes. It's not supposed to be that they're just constantly feeding the system with money to manipulate prices. Like, they don't want to admit that. And if they admit it's just right now, it's a crisis, we're only doing it now, and then we're going to stop and we're going to take that money back. Like, that's sort of the story that they like to say. So, like in 2008, they printed a ton of money. And they were like, oh, their original story was, we're going to print all this money and we're going to take it right back. And they started taking it back. And then stuff was really crashing. That was in February 2009. And they said, okay, we're not going to take it back now. We'll take it later. Okay? And then that's when the bottom was put in. People are like, well, this time they just printed right away. As opposed to in 2008, there was a lot of hemming and hawing before they printed. Well, you know, I think it's the same story just with bigger numbers. I think that they did the stuff that was mentally easy to do, but there's a lot more printing to come, and they're not going to do it unless they're forced to. So I think we're going to see, although the Fed has been ridiculously accommodative, my guess is that they're going to try to slow it down. I mean, they're already trying to slow down now, and they're going to try to flatten this out, and they're going to be pushed by crisis into printing a lot more again, which means that's what the stock market starts to come down again, things start to crash again, and then the Fed comes back in, and you got to play this game, right now. I mean, listen, I I think if you need cash, now's a good time to get some. Looking at the stock market, right, and the crypto market. If you're now's not the time to pile in. But listen, I could be wrong, and this is why you have a portfolio. You can't be all cash. You can't be all in, especially in this crazy market. But you always got to remember it's just an odds game. It could be wrong. Maybe the Fed does just keep throwing money, and everything goes up and up and up for a year. I don't know. Could, and you don't want to miss it, so you have to play both sides of the fence there. Which, let me talk about my portfolio overall. I feel like we've sort of led to that. I do want to get to Ethereum. Ethereum to me is my number one conviction, other than Tesla. But Tesla's price right now, I'm a little worried about. Talk about Tesla in a minute. Ethereum, which I will also talk about in a minute. But I like when it comes to, so just your crypto portfolio, I really think 60 to 70% Ethereum. I think it's the way to go. Okay? And then in your crypto, if cash, I think right now you want to have some dollars, because I'm afraid of this volatility and I want to be available if everything falls by 50% again. Like, I want to be able to get some more. So I think you can have some dollars in your crypto. I like DAI. Oh, speaking of the dollar peg tokens. So when the, March 12th, Black Thursday, and everything crashed, in the real world as well as crypto world, what was interesting was, so dollar peg tokens went up because everyone was running. And then after that, people were worried about the financial system. And you saw USDC and most other stable coins trading below $1 because people were worried about the dollars that back the dollar peg token or the banks that back the dollar peg token. Tether, ironically, was trading over $1 because Tether isn't backed. I don't think the reason they use Tether is because everybody's using Tether and it's integrated in the system. Its value comes from usage and transactions and integrations and not by the backing. So Tether was trading over $1. And DAI also stubbornly trading over $1 for a long time until recently, which is another thing to talk about. Finally they got the peg back to $1. But anyways, I like DAI in a crash because it is backed by real collateral that is there, provably there, and it's Ethereum. And if the world really comes to an end, and there's some major catastrophe, DAI would be converted into Ethereum. You get Ethereum tokens, you're like, well, now I got stupid Ethereum tokens. But remember, if all that happened, the price of Ethereum would be low. So you're backed by collateral, and if there's a huge crash, you're going to end up getting Ethereum at a really good price, right? At a crashed price. So I think DAI is one of the safest dollar places to hold $1. I mean, I'm not saying don't have any money in Bank of America, right? The Fed will certainly print and give money to Bank of America so you can get your dollars or some amount. But I think if you're worried about end of world situations, you want to spread your dollars around to some different banks, including Coinbase. Hold US dollars, not even a token, not even DAI or USDC, just dollars in Coinbase. That's a bank that does have some collateral. Maybe they'll take care of you better than Bank of America in end of world situation, right? And who knows, maybe there's no end of world situation. We made it through 2008. Maybe they can pull another 10 years out of this fucking financial system that is way past its age. But anyways, so that's most of the portfolio. Then I've got 3 that I like for a long-term bet. Binance, just because it's such a great company, and I really believe that CZ wants his token to succeed. Like, what is the point of the token? What is the value of the token? What is the token based on? I mean, I don't know. They burn some tokens every quarter, sort of related to how much they got in profits and this and that. But the real value is that Binance is a huge company growing extremely fast with a genius CEO who I think he likes the token more than he likes the stock. The saying I remember in 2017 for so many shit coins was, I was like, Jesus, I might want to buy the stock of that company, but I wouldn't buy the token, when it comes to CZ and Binance, I like the token better than the stock in the long run. I believe that's where they're going. We'll see what happens. I wouldn't put a ton into it, but, you know, it's one of these things that could crazy moon. Zcash, so I think Zcash I think they've won the privacy token game here in the medium term. Like, people love XMR or whatever, it's Monero. You know, they've got a great team, or there's reasons why Monero is great, and there's other ones out there again, but it's like, where are they? There's nothing happening. Zcash is being integrated into a lot of privacy systems that are being built on Ethereum. Zcash's system itself has recently been upgraded, and the amount of shielded, actual privacy used transactions is growing at a healthy pace. I don't know, when it comes to privacy, and this is just this is a moonshot too. It's like, imagine if Zcash becomes the private money. It's money. If people who want offshore accounts or whatever the hell people need for privacy, and it's not all criminal activity. Like, you should be able to have some privacy with some of your money, and there's plenty of legitimate reasons for it. But whatever it is, if Zcash is the money, the store of value for privacy, there's no metrics, there's no dividend. That's just, it's money. Money is the bubble that never pops. So, Zcash potential is like ridiculously high. It might not happen at all. But it's been down for a long time, and I like it as a little hold. And KNC we talked about. I want to see how they do with dividend paying, and if the dividend paying is good and growing, then I will continue to lovey it. Now, but again, so let's just say if you had 70 and 15, that puts you at 85. That only leaves you 15% of your crypto portfolio for sort of these three. Now, I would also have a budget for experimenting. Now, Ren experimenting is difficult. You need to get a node. And right now, the price of a node, you're going to buy 100,000 tokens. Today, it's at 67, 6 cents. Whatever, a month ago, it was at 3 cents. So now at 6 cents, it costs you $6,000 to gather data on Ren when it launches. So that might be over your budget, fine. But 0x, like I said, why not be staking, tracking the data, see how much it pays, get to know the system. Augur is going to upgrade. I would, be testing and see how it goes. And there may be others out there that you like. Test it. Play with it. See if it's good. Don't just read stupid articles or listen to idiots on Facebook telling you moon, Just, do the work. And this is an area where you can have an advantage because nobody's doing this work, right? I'm probably the only one who knows the dividend rate, and now that you've listened to me, that 0x has been paying. Because nobody knows. Nobody's doing it. And the few people who might be tracking it, they're not making videos. So this is rare information that you can have by doing the work. Now, as far as a portfolio overall, now one thing I didn't mention, I made it, you can watch some of my past videos. I did one on portfolio overall. And also, I keep mentioning I'm going to get to Ethereum. If you're really into the bull case of Ethereum, I made one. It's a few months ago I made the video. It's probably still totally relevant. You can watch that. Anyways, portfolio overall. One thing, I mentioned 50% cash right now. And one thing I should mention about that is, for me, now keep in mind, it's not like I have 50% cash and the other 50% is in bonds and S&P 500, right? 50% cash and the other 50%, I got Tesla, I have Ethereum, I have a genomics fund. These are things that can go up 5-10% a day, right? So I've heard someone describe this type of portfolio as a barbell, super conservative on one hand and then they call this risky. I don't call it risky. I call it, high beta. I don't even know if that's the right word. High volatility. It's binary outcome or something. I mean, honestly, I don't even think, listen, Ethereum, we used to say with crypto, oh, it's either going to zero or it's going to the moon. Ethereum's not going to zero. We're years off the last bubble. Still 80% off of its highs. The growth rate is insane. The thing isn't going to zero. It may sit here. It may drop 50% again, you know. But in the long run, worst case scenario on Ethereum, I think, is you're stuck. Like, the rally that we're dreaming of or that I'm talking about doesn't come for like 5 years, right? And you're just stuck. And it bounces between 100 and 200 or whatever it is, 150 and 300. Bounces between those, you know, for another 4 years. That's the worst case scenario. Best case scenario is, you know, it's at in the thousands in months, right? Possible. Anyways, so my 50% that is not in cash is mostly in super high growth. People would call these very risky. For me, they're not risky because I've studied, I've done the work, I have years of experience in these areas, and I feel confident. Now, for those of you who think, oh, I trust Dave, so I'm just going to copy him. Okay, hey, maybe that works. I do that with I follow some people, and if they say stuff, you know, someone once said to me, oh, well, you probably only follow people, you know, that you agree with. I'm like, no. I follow people who are geniuses, and whatever they say I agree with, you know. Now, sometimes there's conflict. I'll get to that in a minute regarding, you know, Cathie Wood says we got a V-shaped recovery, and Chamath says we don't. So what do? We'll get back to that. Now, the point is, the risk of just copying some genius is, hey, I love Ethereum, but it's a fast-moving industry. There's still a lot of unknowns. I do my research, and suddenly I start to think, nah, I don't love Ethereum. Well, first of all, as soon as I figure it out, I'm not going to call you, right? I don't even know you. Second of all, I'll make a video, but I'll make sure I'm sure. And to be honest with you, if I got a priority, oh shit, I better get out of Ethereum. Oh, and I need to tell all my YouTube followers, I'll sell it before I make my video, right? And maybe I'm busy. Things are going on. I don't have time to make the video. So the point is, if you're just following me and not using your own brain, hey, things change, and you may not know that I changed my mind until it's too late. Okay? So, and speaking of that, you know, Stellar is an example, and I'll mention it again, too, because I have a lot of people who follow me from the Stellar days, and my store in Stellar has not changed. It's just... And I guess you could say, am I watching? I still watch Stellar. I listen to, what's his name? Jed McCaleb, who I like, talk. And hey, they may succeed and find a niche in payments and actually become a great company, and then someday some value accrues to that token. I'm watching it. And if I see that happening, I will buy XLM. But right now, you know, haven't even launched. They're launching an app in Latin America, payments app that, you know, could be awesome and start to go viral and create, you know, a lot of things. So if I see that happening, I might want to get some XLM. But keep in mind, XLM has to launch something that gets a lot of adoption, and then we can start to think about value accruing to the token, the XLM token, because if this app launches and it's really successful, like, that doesn't mean that anyone's going to buy the XML token. You don't need it on Stellar's platform. So, anyways, back to this. So, portfolio right now, I have a lot of cash. I think dollar is king. A lot of people need dollars, and this economy looks like a fucking disaster. So, I think there'll be opportunities. I'm willing to wait. But again, like I said in the last time I talked in a video about portfolio, cash is king until it's not. And that turn could be quick. You start seeing the Fed printing money, giving it to people. Inflation's coming, or some reason inflation starts that I don't see. You're going to have to get out of that cash quickly. But right now, my expectation is the Fed's doing the same playbook. And what have we seen for the last, several decades? Deflation. And now they're ramping up. I think we're going to get more deflation. I think oil is a canary in a coal mine. We're seeing prices go to zero. I think we're going to see that. We'll see. Maybe not. Whatever. But that's, So, I'm going to talk about Tesla. ARKG is this genomics fund, Cathie Wood. we'll talk about that when I get to talking about my geniuses. And then, I have some of these things that I've gotten into. Berkshire, again, we'll talk about Warren in a minute. That's a boring, I don't know, that's not going to go to the moon, but it's not going to go to zero either. And it's a nice, boring thing. If you have some real estate, right? I'm not excited about real estate, but then again, it's property. It's not going to go to zero. People there's some value in the land and the place, the real estate, whatever it is. If it's a house, someone can live there, right? So those things, to me, are a little boring. But it's nice to have some boring in your portfolio. And for those of you who are young, I get it. Because when I was young, I don't want anything boring. I want everything changing really quickly. And I'm on top of it. It's very exciting. And I love the excitement. When you get older, you're like, oh, God, I wish I had some fucking boring investment that I didn't have to. You want to stop working eventually. So throughout life, it's good to accumulate boring shit that you don't have to worry about. Speaking of Boeing, I think someday... Boeing's in a world of hurt, not to mention just because no one's flying right now. But who else, we need airplanes. People will get back to traveling at some point. And Boeing's also in a lot of trouble because of their pension funds, which is just a stupid part of the whole, the economy's all fucked up with their pension fund thing. At some point, I think Boeing bottoms. And talk about a boring company that ain't going away. It's Boeing, right? We're always going to need more airplanes. Nobody else is going to be making a Dreamliner anytime soon. Hey, it might not hit bottom for a year or two or longer. I don't know. We'll see what happens. But I would love to have a bunch of money sitting there because that's something I don't have to look at. Ethereum. Now, I love crypto because I read about it every day because I enjoy reading about it every day. It's not a chore for me, right? I really don't. But I don't want to read about, so it's, have... Especially you young kids, if you are accumulating cash, look for boring shit. That's why I like Berkshire, too. It's just like, I trust Warren Buffett and their stuff, and they're in a bunch of things that won't go to zero, right? Maybe they don't even beat the S&P 500, but it's nice to have some things will not go to zero. Okay. Now, my other two, Tesla and genomics, I don't think these go to zero either, but Tesla, what is the price? I mean, now it's at 800. Well, I don't know. That thing could be at 400 in a minute. And that's a 50% drop. And without anything changing in the bull case. Meanwhile, something could change regarding the bull case on the story. And then all of a sudden it's at 300. It's fallen by 60%. Like, that can happen. I don't think you see that happen with these boring type of investments. Okay, so let's get to, holy shit, 47 minutes already? Whew, what did I put in my coffee today? And I haven't even gotten to Ethereum yet. So let's go to Ethereum. First of all, I wanted to mention this, but before I even say this, let me just say my Twitter. I love Twitter for following experts. I only follow 74 people. A lot of them don't tweet. That's where I get all my news. Only from experts. And so I think that's a great way for you to get your news. I am posting things. My new thing with Twitter, I'm trying to post predictions. I feel like that's sort of my Twitter voice. Maybe. We'll see how it goes. But I like just, predictions. And so please follow me. I like having followers. However, let me say, you may notice on my videos, I comment. If you comment on my video, I reply. Like everyone, I read everyone. I'm sort of into it. I post this video gets posted today, and I read every comment, and I comment on every comment. Twitter, I do not. I will read your comments, but I don't. I'm trying actually not to. It's just like it's too much, and there's too many crazy people out in Twitter land. Nevertheless, I would love it if you read my tweets, gave me a heart on one so I see what people care about, and comments. But anyways, on my Twitter, I saw this post and it just got me thinking a little bit. Somebody wrote, Ethereum is prolonging the legacy financial system, full of intermediaries. Look at DeFi, and Bitcoin is creating a new one without the middleman. That statement is the exact opposite of what is going on. And it's also the reason that I think Ethereum is so much better than Bitcoin. I mean, there's a lot, you could talk about a lot of reasons, especially I believe that the security, the monetary policy, and I'm not going to get into that. You can watch my old video. That's probably the main thing, is the monetary policy on Ethereum will soon be proven to be much better than Bitcoin's. But Ethereum is also a decentralized, full financial system. In other words, I can buy, sell tokens to collateral, borrow, lend, make payments, do all kinds of things. Privacy, non-private, whatever, without touching the legacy financial system. On Bitcoin, you can't do anything. Like, the only way you get your tokens through these centralized exchanges, and then you can't do anything with them. If you download your own Bitcoin, you can theoretically, not even theoretically, you can send it to somebody else without going through a centralized exchange. But who's doing that? Nobody. This is the exact opposite. And I also was struck by, Vitalik actually replied to this. I really think it's the opposite. Never mind, I really think. I feel like it's not really think. It's like, are you a fucking moron? Of course it's the opposite. I'm not saying Vitalik's a moron. Vitalik should be like, you idiot. He's trying to be nice. He's Vitalik. It's fine. And then another guy I follow, he was also, well, I commented on this myself. What the heck was that? I don't know how important this is, but this guy too, he's like, I'd say I agree. I'd say I agree with you, Vitalik. These are people who understand the system. People are like, well, I think Ethereum's a little more decentralized than Bitcoin. Enough already. Bitcoin, listen, the thing may keep going up a lot because people don't know what's going on. And I don't know when they're going to know what's going on. But Ethereum's eating its lunch in every metric and every vector. I'm going to point out a couple that I think are key. By the way, on Twitter, I'm DaveLevine0.com. You can't put a dot, DaveLevine.com. That's usually what I like to use. And DOTC was too long, so I get 0.com. Okay. This video, so Ernst & Young, this is a big consulting organization who is just killing it with Ethereum. They get it there, and they're leading. If you want to get into the weeds, listen to the opening keynote of the EY Blockchain Summit to see this is how, you can understand, Ethereum's not just about, us kids. Well, I'm not a kid, but most of my listeners, you guys, are kids buying tokens. It's a real solution for Fortune 500 companies and governments. And I'm going to get to China and JP Morgan. This is a real solution. And Ernst & Young is the type of company that is assisting Fortune 500 companies for integrating Ethereum. And also, that reminds me, there was another, there was another thing. If you want to get bullish on Ethereum, this guy posted here, 82 posts. There was 82 thread on things that's going on with Ethereum. It's just unbelievable. But I liked this one here. We were also able to identify wallets associated with major players. JP Morgan, Chase, Reddit, IBM, Microsoft, Amazon, Walmart, all accumulating ETH. They're not just integrating into the platform. They're buying the fucking token. It's big. China. So China is serious. Now, I'm not a big China fan in general. I don't want to live there. I don't like them restricting free speech and all that crap. But when it comes to executing business stuff, they ain't bad, right? Even Elon Musk said, wow, he never built a factory so quickly. They're launching their blockchain financial system. It looks like they're doing, one step after another. They're moving pretty close, pretty carefully. They got a smart plan, I think. We'll see. It's compared to, Libra, this thing, they're fucking smart. And they're starting with a payment system. And they talk about it here in this video. If you want to hear the, this is, I stopped it here at around 25 minutes. You can listen to what China's plan is. But China is they're an import-export company. They want to be integrated with the world. So they are building their blockchain system, and it's going to connect to Ethereum. So if you're going to want to deal with China, you're going to have to deal with Ethereum. Okay? That's big. JP Morgan, for a long time, they're working with Quorum, which was a fork of Ethereum. And this is still sort of rumors. But JP Morgan may also go big in connecting to Ethereum. And one of the big points also in this EY blockchain summit was that, shoot, did I lose my train of thought? What the hell was I saying? JP Morgan. Well, that point just fell out of my head. Something about everybody integrating with Ethereum. I don't know. I had one more point. I'll think of it as soon as I finish the video and whatever. Okay. So that's some of my Ethereum love. What else? Did we talk about all these? I didn't talk about ARKG. Let's go to this, because this is also, so Buffett spoke this week. And first of all, it was interesting. It was, I got information. It just wasn't as exciting or as informative as I was hoping. But then again, that fact was informative and important. And basically, what Warren Buffett said without saying it was, prices haven't gone down enough. He hasn't bought anything. It looks like the world's a fucking mess right now. You can't figure out any numbers. Things like airlines, there's no V-shaped recovery coming. He dumped it all. Like, he didn't want to be negative. He didn't want to say sell. He's never said that in his life. He didn't want to say, we won't recover, because we will. But one of the things you notice with Warren Buffett, he's like, oh yeah, what do you think of stocks? Well, I think stocks will outperform bonds that are paying 0% over 20 years. It's like, okay, stocks will outperform bonds over 20 years, and the bonds are paying 0%. Yeah, okay, I agree with you. But what do I do tomorrow? Like, he was super negative in his own way of not being negative. And I was like, and it's just, the reality is at first when everything started crashing, I'm like, Buffett, Boeing's going to be on the edge of bankruptcy and Buffett can step in and that'll be awesome. But then it didn't get anywhere near there before the Fed started bailing people out. We may get back there. But, so that was what Buffett, Chamath, he's got to have another talk coming soon because he's been doing monthly and we haven't heard from him for like a month. But his original point, which I think remains true, is what's important are the second and third order effects. And I think that's going to start happening in the market now. We're going to start talking about those, which is, the virus, and honestly, even the virus getting under control. I was expecting the U.S. to be somewhat shitty, but the U.S. looks like possibly the worst in the world. It's just fucking, I'm not going to get off on a coronavirus rant. That is a video coming. But, boy, are we fucking morons. Not me. But the government, institutions, unbelievable. Anyways, the second, third order effects, which is, people lose their job. You don't just come right back. And, people don't pay mortgages for a couple months. Oh, and then they can start paying. But the mortgage companies can't afford to miss 2 months. All of this stuff starts affecting each other and then has another effect back on itself. And it's like, there's no just snap back. And Chamath, you got to always listen to him. And, he's been negative. Sam Zell had a long talk on Bloomberg I listened to, and he's just I don't know, everything's fucking changed and prices haven't come down that much. They're not doing anything either. Nobody's buying, and Sam Zell specifically said also, markets need to clear. In a sense, markets are frozen. That's what the Fed did. They came in, to unfreeze the markets because now there's a buyer, which is the Fed. And then everyone's like, oh, well, if they're buying, I'll buy too. But it's not, none of it's real. And the smart people are still holding a lot of cash because these prices are not real and they're sort of ridiculous. And at some point, unless we just want to go all in on socialism, you have to have a market with prices. I don't know what's going to happen, but now Dalio, you know, I feel like he's sort of given two messages, and I'm not sure. I feel like so he talks about how, and everyone also, all these guys, I think that, now Buffett, of course, didn't say this specifically, but I even got that vibe from him. This is not a downturn. It's not a correction. It's not even a great recession. Depression years. Okay? To get through this shit. You know, Dalio compares it to, he said that 1933, 1929, you had the crash all the way to 33. Fed started printing in 33, and that's when the market started to recover. And then we had Bretton Woods in 1940, whatever it was, with a new financial system. And then we were off and going to the future. And so on one hand, he's like, just like everybody else, oh, this is the big crash. But he also, where I think he's a little wrong, and if this is exactly what he's saying, I'm gonna have the balls disagree with Mr. Dalio a little bit. So he says it's like 1933 right now, and if you look at the stock chart, it's when it started going up, and that was a good time to buy, because that's when the government stepped in and started bailing. But here's the problem. It's true that the government already did step in and start bailing, but think about it this way. I don't know about a good analogy, but I'll just explain it, which is this. So, if everything sucks, and what happened in 29, there was a crash, and the Fed didn't print, they even tightened, like everything was really, really hard for 3 years. And only the strong survive, right? And then all that's left are like the strongest. And then the government comes in and starts filling in some holes. But what we're doing now is things are starting. Nobody's really failed. I mean, there's some things going, small businesses going out of business, but you can't fill all the holes until all the holes are dug. I think that's my point is. And so I don't think you can speed up getting to 1933. Now, you could argue that 1933 could have come in 32, maybe even 31. Maybe you could have argued it could have been a little more orderly or whatever. But I don't think that 1929 could have lasted, that revolution could have lasted just a month if the government had all the answers, because you don't have, and if you look at our current situation, we don't have all the answers. We don't know what the fuck is going on. Nobody knows what's going on. So you can't fix it all in the first month because we don't know what the problems are. So Dalio's sort of like, okay, now the Fed came in, so it's like 33, so now the market's going to do okay. And I don't even know what he's exactly saying. Like that, maybe he doesn't think the market's going to go up a lot. Maybe he just thinks, well, it's not going to crash like more like it did in 29. Maybe he's right. Maybe prices do muddle along for a long time. I don't know, but I don't watch out for that comparison, because the point is the Fed is supposed to come in as a buyer of last resort if a bomb explodes. Eventually, like they say, the dust settles. You look at the thing, oh, there's a hole here where the bomb blew up, so we need to fill in that hole. And here's some people that are hurt, we need to fix them. And then we're going to clean up the street, and then it's back to business. But if the bomb goes off, and there's still rocks flying, and there's a bunch of smoke, you can't come in and fix it all. You have to wait for that dust to settle before you're able to fix it. And I think we're trying to fix it while the shit's blowing up, and for all we know, there's another fucking bomb. So, and I hear all the geniuses, these guys, they're all standing back going, whoa, that was a big explosion. I'm going to stand here and watch a little longer before I get in, and, watch all the government workers run into the fire right now with fucking buckets. I don't know. And then, so our only positive person, so Cathie Wood, who I like a lot, and she's been doing a lot of videos. She's the only one saying, oh, V-shape, we're going to go right back to normal. You know, it's going to be the greatest growth. Like, she's very positive, and God bless her. I think one reason is because she's taught, you know, she's not a value investor. She buys the things. You know, notice though, you know, this coronavirus has been a lot of problems, but some things are doing well, right? Online businesses. You know, Zoom doesn't have problems, right? They're very happy. Amazon is growing. You know, so she has a fund that I like on genomics, which is, you know, medical, you know, helping with health, with genes, and I'm sure a lot of those companies are dealing with making things better regarding viruses. So those are doing better in this scenario. So part of her situation is that in this catastrophe, the innovative, strong companies that she invests in may actually have hit bottom already, or may now be stronger than before. You know, this is, you know, oil's getting killed, and she, you know, she's investing in batteries. You know what I mean? So, hey, part of her reason for her optimism might be because in her little world, it actually is positive. The other is she might just be wrong. If it was more, you know, some people are positive, some were negative, I might waver a little more. But I mean, everybody that I respect is like, hold on, stand back. The dust ain't settled yet. So I don't agree with Cathie Wood's V-shape. But, like I said, ARKG, her genomics fund, I do have some of that, and I'm holding it, and I don't know. Maybe that won't go down, right? Maybe that'll just keep going up. So, you know. Tesla, you know, you may know if you've watched my videos, I love Elon. God bless him. Not only because he makes awesome, Tesla is such an amazing car, and he is amazing, but and I love the way he speaks out, and I like the shit he's saying about the you know some of his tweets. Panic is stupid. You know, free America. You know, the Star Spangled Banner. What's the, you know, land of the free, home of the brave. He wrote, land of the free, home of the brave, ? Right? Like, really? Are we brave and free right now? No. It's like, I can't go to the fucking beach. In my whole life, I shouldn't say my whole life, but, you know, since I've been in California, when I go to the beach, I've never been 6 feet near somebody at the beach in my life. It's a huge beach, and I don't need anyone kicking sand in my face. And that's going in the summer when it's as crowded as it gets in LA. The beach is fucking huge. You know, it takes, many of you might not know about LA beaches, and believe me, I know. Try taking a 3-year-old, you know, a 2-year-old and a 4-year-old to the beach. From the parking lot to the water, it's like a friggin' half mile because the beach is so long. There's no way. Okay, where was I? Oh yeah, so he speaks out against the stupidity that is going on with our policies, and I love it. But as far as investment goes, you know, so Tesla was in this range for a while, and then it was like, oh my God, they're a real car company, right? Their cars are awesome, and it shot up, and then it was in this range for like 5 years, and then we realized, you know, and you can watch my older Tesla video, you know. Again, they're awesome. Now it's for new reasons. And I think we're going to be in this range. I think like 1,000 to 500. And it might be for years. With this Corona stuff, it could even go lower. I mean, a lot of their factories are like closed. And who knows when they open. And maybe people don't have as much money. But in general, I'm not worried about Tesla performing. But it's priced in right now. The next move up for Tesla, the next parabolic, you know, when we go from 1,000 to whatever, 5,000, that's going to be with autonomous driving. And it's not here yet. You know, I have a Tesla, and I see things, I was driving, and I knew, I saw the yellow light. I can't remember why. I kept going a little faster. I don't know what I was thinking, but, you know, anyways, the car started beeping. And I was like, wow, it saw the friggin' yellow light. Good for them. So it's making progress. But the autonomous driving, it's coming, and then it comes. When is it really here? When I see it really happening in my car, I'm going to start loading up on more Tesla. But everything else is priced in. Like all the other awesome things about Tesla right now, people know. The one they don't know is the autonomous driving. Like people still don't believe that. And they don't have to believe it because it's not here yet. So when it's here, that's what the best investments are when there's a truth that is important and nobody knows, right? So if Tesla has autonomous driving and it's awesome and nobody knows that, people are saying it's never coming, like that's when you want to get it. And that's why I had with Tesla, it's like, there's a demand problem. There was never a demand problem. There's a production problem, and it's like, well, there's some problems that are ramping up, but they definitely, he can produce these cars. Like, I knew that wasn't true. If he can land a fucking rocket ship in the middle of the ocean on a boat, an unmanned boat, he can make a fucking car, right? So that's not a problem. And what was the other thing that everyone was wrong about? I don't know. So when you know those things. So right now, Tesla's, I think, at a trading range with this market high and this thing up at 800, I would not pile in right now. I would lighten your load and get more when we're down here. What was the low? 427. 420, baby, right? Okay. Tornado Cash. I just want to talk about this because I think it's kind of cool. I think, so, if you think you're a crypto investor, and you're leaving your money on an exchange, you're a gambler. You're playing games. You're not for real, okay? If you are for real, you own these tokens. You have a system for keeping stuff secure. You hold your own tokens. And now you want to take it a step further. If you have your money in a wallet, so here's what happened to me. I have my nephew, and for his birthday, I want to give him an Ether. So if I just send him one Ether from my wallet that has all my other stuff, you can sort of backtrack because you can see where it came from, and then you can see my wallet, and you can start to figure out everything I've ever done with crypto, probably. I don't know. Right now, I'm not saying he's going to do that. I just don't like the idea of there being this trail. So I give him a gift, and it's a trail to all my history. Not that I have anything to hide. It just, I don't know. So, but I can go to Tornado Cash, and I can deposit one Ether, and then take it out to a new wallet address that is clean and has no history, and I can give that to him as his gift. I think this is a really cool site, and I think, if you want to hold your tokens, and you want to hold them, and you want to do something, I also thought of, for schools, I also have another idea for, for donation, let's just say for charity or for donating, and I want to give money to kids for doing things with education. I have ideas. Get into that in another video. I don't want to start giving out tokens. Oh, here we go. I'm going to hear it ringing for an hour. Where is that coming from? God help me. I don't know where the ringing on my computer is coming from. Okay, it's done. I don't want to give money. It's a charity thing, and it's connected to my all my stuff. So it's nice to have this sort of ability to create some clean ether. And so I was just pointing it out. I haven't done it yet, but it seems well respected and a well-running site. They're doing this trusted ceremony thing. Vitalik Buterin contributed. Other people I respect have spoken highly of this site. Seems for real and a good way to create clean, no history ether. So check that out. I think I might be done. Let's just look at, a couple other things. So Hex, I made a video about Hex, but I took it down because it started going straight up, and people were like, oh, you were pumping, the price went up 100% when I had my video. I'm not pumping I wasn't pumping it. I was talking to Richard. I thought it was a really interesting conversation. I like Richard Hart. His token, no offense to him, it's not, I don't need to invest in it. It feels more like a little bit of a game to me, more than a real investment. But it's a great game, and he's got reasons to say that it's more than a game. Like it's, and it may do great. Whatever. I mean, you know, he gave some away for free if you have Bitcoin. Nothing wrong with taking some for free. And boy, it's been going straight up. It's hilarious. Oh, so the other one I wanted to talk about was Maker. You know, I love DAI token, but Maker, this thing, you know, I don't know how this token really has any value. So I love Maker as a foundational company. It's not even a company. Foundational, decentralized organization, or whatever the hell you want to call it, which supports DAI, which is really important. And I think these things are important and won't go away. But I don't see the value in the token because I don't see anything accruing to this Maker token. Maybe someday, but it's literally like you need trillions in DAI for Maker to match this price. And maybe it will get to trillions. And if it does, and it's still at the same price, you know, then I would buy it. But today, I watch and I enjoy, and I think Rune, who runs it, is a genius, but wouldn't buy the token. Okay, I'm a little tired. Hour 15, longer than usual. Hope you enjoyed. Let me know your thoughts. Have a good day.